Welcome to Maven Cast, deep dive conversations with industry experts designed to move your business, technology, and thinking forward.
Hi there, and welcome to Maven Cast. I'm Brian Klingbeil, Chief Strategy Officer at Ensono. I'm very excited to be with you today. It's an incredibly exciting time for insurance, connected to some of the world's most significant events lately, and of course, as always, the most important events in individual people's lives, the power and comfort and peace of mind made possible by a collective. Innovation here can have a huge impact, especially IT innovation. Efficiency can create more comfort for people and ideally at a lower overall cost. So in this four-part series, we're going to consider how insurers can make their tech the best it can be and ready to meet the future. In this first episode, we're exploring the inescapable topic that everyone's talking about, and that is AI. Joining me are three of the brightest minds I know on the subject of insurance IT, Holly Olive and Phil Ratcliff, who've co-founded Illumifin, where they raised over $500 million in funding and positioned the company as a leader in the technology-enabled TPA market. Prior to that, they both held leadership positions at DXC Technologies, where they grew revenue and expanded the insurance practice there, as well as various leadership roles at IBM. We also have Greg Black, a global insurance executive who's been CIO for 2 U.S. carriers, and for the last 15 years, he's consulted with carriers on modernization, emerging technologies, and process improvements that affect and improve the bottom line. And as near as I can tell, Greg knows every single person in insurance. All three of them are bringing their many decades of experience and wisdom to our insurance practice here at Ensono. We're very glad to have them. If you're talking insurance IT, these are the folks you want in that conversation. Holly, Phil, Greg, welcome to Maven Cast.
Great to be here. Thanks, Brian.
Yeah, thanks very much. Excited to be here.
All right, let's kick off. Topic of the day is AI. Why don't we start with what are some of the true AI use cases you're seeing in insurance that are helping to drive differentiation and efficiency in carriers? Why don't we start with Holly?
Sure. Thanks, Brian. And it's great to be here. Thank you to Maven for inviting me. I'm looking forward to this conversation. So, AI, my goodness, it's everywhere. I don't think there is an industry that has not been changed by AI, from students going to college through to car makers, and of course our favorite industry of insurance. You hear the word everywhere. And it is certainly revolutionizing insurance. There are lots and lots of use cases out there across the entire value chain of insurance, from underwriting through to claims, through to customer service. I think one of the ones that's sort of nearest and dearest to me, because I've been involved with it now for a number of years, is really around how AI is changing customer engagement. And of course, this is one that does go across all industries, not just insurance. It's pretty hard to engage with a company today and not have AI being used. So we're seeing that in insurance. We are seeing chatbots, virtual assistants, insurance dictionaries, all being implemented so that customer service can be done 24/7. Answers are immediate. I can remember days in insurance company when you went to sort of a book on your desk and how you flowed through and looked at all the different products and tried to answer the questions. That information is now available to customer service reps right at their fingertips. We've got chatbots that are able to answer questions immediately. Call in for a claim. Chatbot's going to assist you. It's going to get the claim form in your hand in seconds, and it's going to immediately start that claim process for you. So just one of my favorite examples.
Is that pretty pervasive? Like if I reach out, regardless of who my insurance carrier is, my first interaction, is that almost always now going to be AI across the various vendors out there?
Certainly in the property and casualty world, it's completely evasive. It's invasive. In the life insurance industry, a little bit slower of an industry to adapt some of the change, just simply because of the amount of data and how old some of the data is. But it is starting to become pretty relevant in just about every life insurance company as well.
And your comment about older data, meaning you obviously, in order to make AI work, and in particular chatbots, you have to train it on the model, give it access to the information that it needs to answer the question. Are there data format issues that are not allowing some of those front-end chatbots to be able to leverage that older data?
For sure. I think that's one of the topics we'll get into today is data. And one of the challenges that the insurance companies, all of the insurance company are facing is how do they make that data available to all the new technologies? Technology is there, cutting edge technology is there, but without the data, without being able to access the data, it's hard to leverage it. So insurance companies have the challenge of making that data available either through APIs, through microservices, or some of the things we're seeing, if I stay on customer engagement as just one example of it, there are other ways to do that. Customer front-end systems where you're exposing just the important customer data. If you aren't able to expose all of your full back-end data, being able to expose some of that customer data allows you to implement the virtual assistants on at least part of your business. So a lot of different ways that you can see it being implemented.
And where would you sort of rank the performance today? Like, what's the customer experience like? And the other guys should feel free to chime in here as well. But how would you grade them, for example, like from A+ down to D- in terms of the reality of the experience as I interact with that AI? Is it poor? Is it good? Does it pass the Turing test? Is it that good? Where are we at?
Phil or Greg, you want to?
Yeah, sure. I think as Holly pointed out, it depends on which segment of the insurance industry you're talking about. And obviously, when we're talking about customer engagement, we're generally talking about personal lines. In the life companies, they're using AI models to get in and look at product forms and process manuals to, in AI, empower the associate talking to the customer. So that person, as Holly said, doesn't have to go to that book and look things up. So what we're seeing is a much faster response time, higher quality, more consistent answers. That results in better customer quality. And whether that customer is the policyholder or the agent. And that's one of the things that they're able to drive today. They still have on the core policy systems, particularly in life, a lot of difficulty getting at that data. So they're doing what they can do. We're also seeing we actually have a customer who is using AI to match the incoming call or with the associate best qualified to produce a successful outcome. So they don't go to the next rep in queue. They go to the rep most likely to produce a successful outcome for them. And that, again, improves customer satisfaction, retention, all, very positive for both the company and the customer.
So just, for the audience, what Greg's describing, I think, is you have a lot of people think of generative AI, which in the form of chatbots. But if you complement generative AI with machine learning, good old-fashioned machine learning, which is a bigger element of AI, you're doing the things that Greg describes in terms of like, based on history, I can link up this particular customer with the person best served to serve them. Phil, you had a comment on the quality, I think.
Yeah, I think I was just going to address a couple of points. I think I would certainly agree with everything that Holly and Greg have said, but AI is going to be truly a generational change, I think, within insurance, not just on cost, but also in terms of promoting revenue. I mean, if you look at insurance companies, they've always said that data is absolutely key, but this is never more so than AI. It's changing the actual structure of insurance companies. If you just look at underwriting, underwriting used to be about bringing together pools of people and establishing them with their risk profiles. Today, with internal data, with external data, you can actually underwrite down to the individual. So we're going to see a structural change in the insurance market. We're going to see those companies that are best positioned with AI able to grow their revenue as well as to substantially lower their costs. So this is going to be a structural change. There are going to be winners and losers, and the current winners may not be those which are the established players today.
Yeah, to that, if I can add one thing, I think Phil brings out an excellent point about what the possible impact could be. Historically, in insurance, we've taken what I call snapshot underwriting, a point-in-time picture of the customer or the risk. And AI will allow us to basically now take a dynamic view, a re-review, if you will. Think if you will, of a car driving along and approaching a hailstorm and receiving a text message from their insurer about reroute yourself and save $5, something like that, where we can actually impact risk directly by continuing to model the customer or risk behavior, which is something AI will give us the ability to do, and external data sources that we now have access to that we didn't have years ago. It's radically changing the way we're thinking about risk, and it's radically changing the way in which we approach underwriting and adjudication.
So we're getting into some other use cases here. We started the conversation with, okay, what are some interesting use cases you guys are seeing out in the field? We ourselves have been looking at AI and making sure we're not attacking it with like, okay, we have a hammer, where are all the nails? We want to start with the business problem and then see if it can be solved or complemented with AI. Holly brought up the obvious one, the client interaction. We're seeing a lot of traction there. Any other kind of interesting use cases? Greg just brought up another one, this idea of kind of real-time changes in your premiums potentially if you change your behavior. Any other use cases, Phil or Greg, that you guys are seeing out there that are catching your interest?
I think the ability to rate on an individual level, I think that is going to be key, because it enables insurance companies to focus on the risks that they think are the most profitable. And that gets to the very heart of what insurance is. Insurance has always been the pooling of risks. Now you have the ability to come in with micro-level data, micro-level segmentation, and take out those risks that you think are the most profitable. So you've got the ability to change the whole way that underwriting is done. You've also got the ability to assimilate vast amounts of information and compare products in a way that's never been done before. So you can change the way that insurance is sold or distributed. And then building on Holly's point, you've got the ability to automate significant processes which enable you to drive out costs. And then sort of linking back to Greg's, you've got the ability to change behavior. That could be at the point of underwriting, at the point of driving. It could be at the point of a claim. Know there's going to be a severe storm, move your car from underneath a tree. There are lots of ways that AI is going to change the way that insurance is actually undertaken. And I think for insurance companies, it's understanding what is the best use case. But this might be one of those technologies where ultimately you need to either go big or go home.
So do you think there'll be some unintended consequences from this? I'm easily the insurance novice on the call, but I'm hearing it's always been this way, right? Your behaviors, for example, if you're a smoker, you're going to pay more for health insurance, right? So now we're going to be able to bring in more pieces of information around a particular individual's behavior, and they will have to pay more. Now that might have the unintended consequence of making people engage in less risky behavior. It certainly will have the intended consequence of, look, if you're gonna have a certain profile, you're gonna pay a little bit more. Yeah. Do you see any kind of business ethics issues arising from that idea of, I'm going to collect more information about you and rate things accordingly?
Yeah, I mean, insurance is a highly regulated business. The more you use algorithms to help determine end outcomes, the more that those algorithms will be subjected to regulatory scrutiny to make sure that they are fair, they are unbiased, they are completely ethical. So,
because the government's doing such a good job regulating algorithms now.
Yeah, I mean, Brian, you're seeing that maybe not in necessarily a negative form, but it's already there in car insurance. How many people have signed up and said, oh, I'll take the little app that I keep on my phone and I will get a 10% discount. Isn't that wonderful? Except when the first year of renewal comes and now we realize that you maybe have a little bit of a lead foot, or your braking is a little hard, or you're sort of going, all of that. Now the insurance company is immediately taking that data and they're putting it into their premium calculation. And now after year one, you're going to see that premium calculation. They sort of, everyone gets the benefit.
Because I know one of the things they did in Europe around energy consumption was making the metering on your home a little bit more apparent to you as a consumer. Yes. And it changed behavior. It made people like, oh, I'll turn the thermostat down a little bit or use a little bit less power. So one would hope the positive impact of that would be a safer environment for everybody.
In life insurance. Sorry.
Go ahead. I think one of the risks, though, and we are seeing the regulators taking an interest. We have model guidelines right now from an AIC, and I'm expecting that to be enhanced. But one of the risks we have is that the carriers could start selecting only those risks that are truly profitable for them. and that could result in a discrimination situation, which I know the regulators would be highly concerned about. They won't want carriers engaging in that behavior. But you asked about use cases. Let me add an adjunct to it. There's a carrier working in Lloyd's London market that is using AI to not only underwrite the risk, but select which risks they consider based upon available capital, deployable capital, so that they're not overcommitting to a certain line of business, the amount of capital that they have. And they can balance that out based on losses or changes in the environment that they're anticipating. So it's resulting in a much more efficient deployment of capital within the carrier, in addition to underwriting.
And let me give maybe just
one more use case maybe from Phil.
Yeah, let me give you a final use case, and that is around the use of AI, particularly in the life insurance sector, to look at legacy code bases of underlying platforms. There's a lot now being talked about the efficiency of converting and updating the language of legacy systems, of which there are numerous across the life insurance sector. If somebody can crack the nut of converting legacy code, facilitating the move to cloud, crack the nut of converting data from legacy applications to new applications, you're going to see a significant sort of decrease in the amount of legacy debt that these life insurance companies hold. So I think really that the way to sum this up is that the use cases for AI really stem the entire value chain of insurance. They're around revenue generation, they're around cost reduction, they're around behavior change. And those companies that can really move forward, can control and structure their data, are going to be well positioned for the future.
Yeah, Phil's done my job for me. That's a great summarization of kind of the topics today. One thing we say here is without good quality data, the only thing you're going to get from AI is the ability to make mistakes with greater confidence than ever before. And that's a real problem in the insurance industry. You got to get things right, and at the core of getting things right is data. And on Phil's point about code conversion, a big part of staying competitive in the insurance space is having creative, solid products that people want to buy, and then making sure you as an insurance company are backstopping it with the best data and matching your premiums to the expense that you're going to incur. And certainly using AI for that purpose is going to become more and more prevalent. So some of the insurance companies out there would be well served to create little ecosystems or incubators for AI within their company to make sure they're not spending a ton of money on something that doesn't have a good output. So I'd like to thank all three of my guests today, Holly, Phil, and Greg. Thank you very much, and appreciate the audience as well. We'll catch you in episode 2.
Thanks for listening to Maven Cast. For more Maven content, including articles, interviews, and videos, visit themavenreport.com.